Hi, good evening, everyone. This is Ark, your host for the day today, and welcome to this session. Let me tell you that this session is on data science in BFSI industry, which is banking and financial services. So, we'll be talking about the agenda of this session. First, we'll be talking around what is data. Then we'll be talking about around what is the difference between data and information. How can you pull out information from data? Then we'll be talking about data science. What is data science and all. So as I mentioned, we are going to talk about data science in BFSI industry, which is banking and financial services industry. So before that, guys, just jumping into the BFSI domain and the scope of data science projects. Before that, let's talk about data science. And before data science, let's talk about what is data, what is information, what is data science, what exactly it is, why it is popular, and then we will jump into the scope of data science into BFSI industry. So, guys, first, let's talk about what is data. So data is the base of everything what we are doing today. Why there is a big hype into machine learning, deep learning, data science, everything. The base is the data, right? And have you thought upon this fact that since last 8 to 10 years, there is a huge increase in demand of data scientists, business analysts. Everybody is talking about data scientists, business analysts, machine learning skills and deep learning skills. Everybody is talking about these skills. Why is that? What is the reason behind that? Why it was not there, a hype was not there before like 8 to 10 years back? Why there is so much hype into data science and this particular domain since last 8 to 10 years? Last 8 to 10 years there has been information revolution. So what is information revolution? Information revolution means, if you remember, and even if you don't remember, like 10 to 12 years ago, there were basic telephones in your homes, and that too was not having everybody in their homes. So at least in a colony of like 5 to 10 families, there will be like 4 to 5 telephones, and that too basic telephone. So that was a very beginning of communication, starting of good communication between people. After that, like starting like back, if we go 8 to 10 years back, when this internet and mobile and the mediums of better communication came, now if you compare that time with today's time, now everybody is having at least one mobile and two SIM cards with them. You are connected with the internet, your TV is connected to the internet, your laptop is connected to the internet, your washing machine is connected to the internet, your home is connected to the internet. Some people are having smart home. And besides the profile of anybody, be it a engineer, be it a doctor, be it a person who is driving an auto rickshaw, everybody is having WhatsApp, Facebook accounts and having internet connections in their mobile phones. And after each 5 minutes you will pull out your phone and you will do something, some browsing, or you will at least do some chats and all. So you are doing nothing, guys, but you are generating some data. Even if you go to Google and you write a query, for example, buy clothes. So if you write buy some clothes, that query is captured, and after that, whatever the results are there on Google, that is also recorded. What are the top links there? That is recorded. What are the advertisements which came on that page? That is recorded. On what particular link did you click? That is recorded. How many seconds did you spend on that link, that web page? That is recorded. Did you buy that product or not? That is also recorded. So guys, what I am trying to say is you are being captured, you are being monitored, and whatever you do on the internet, that is being captured, right? You have a lot of applications installed in your mobile phones. So whenever you install an application in your mobile phone, what happens is it asks for a lot of permissions, that it wants to access your gallery, it wants to access your location, it wants to access your message, it wants to access your photos and a lot of things. And you click on yes, 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 I accept, I accept, I agree. So basically what it does is it captures all the information, all the things which you do on internet on a particular app. So it captures everything, guys. And for example, let me give you a very funny example. Some time back, before this lockdown, I was searching for Delhi Jaipur bus. Now for Delhi Jaipur bus, there was something came to my mind that okay, I should go for a picnic. I just searched Delhi Jaipur bus, and then my mind changed, and I did not buy those tickets, and I just came back and started doing my work. After 1 or 2 days, when I opened Google, again there were a lot of suggestions for Delhi Jaipur bus, redbus.in, Paytm bus service, and a lot of bus services. They started popping up. So why did that happen? That happened because whatever I wrote as a query on Google, that was being captured. So guys, this is the change which has happened in last 8 to 10 years. Everybody and everything is connected to the internet, be it your mobile, be it your laptop, be it your washing machine, be it your oven, be it your fridge, be it your home. Everything is connected to the internet. Everybody in this world is generating data, whether he is sitting in an AC office in a multinational company or he is sitting in a distant village. So that amount of data which is getting generated is uncomparable if we go like 8 to 10 years back. And data is asset. Why? Because if I capture everything what you do, so I can tell you that you are married or not. I can tell you that what diseases you have. I can tell you that what is your favorite food. I can tell you that what is your favorite movie. I can tell you that what books do you read. I can tell you that what are your hobbies. I can tell you that what particular site do you like for shopping. I can tell you that what is your overall personality. I can tell you whether you are in depression or not. I can tell you what is your mental health status. I can also tell you that you are diabetic or not. I can also tell you that which particular medicine do you eat. And guys, you are talking to Alexa, you are talking to Siri, you are generating the data, and each activity what you are doing is being captured and it is being analyzed. That is the reason, guys, that I could say that a machine, a computer, and this AI world, this data science world knows you better than yourself. So that is the thing which is happening, guys, and that is the thing we are here. That is the thing I am here, and this session is being organized. So if I talk about the base of complete all these things which is happening in this scenario or in today's world, that is due to the amount of data which is getting generated, and everybody wants to capture those data. Everybody wants to analyze that data. Everybody wants to know the insights from that data. If I want to sell a particular product, I want to understand the customer's pros and cons and or choices of the customer. What does the customer like? What does the customer dislike? So if I understand the likes and dislikes of a particular customer, I will be able to sell him the particular product which he's looking for. So again, let me give you an example that if you see your Facebook page, if you are a youngster and your age is between 80 to 20 or maybe 80 to 25, the type of advertisement, the type of posts which are coming on your Facebook page is completely different from your mother's Facebook page or maybe your father's Facebook page or maybe your sister's Facebook page. So everything is personalized, guys, and that is due to the fact that every activity or whatever data you are generating is being captured and is being analyzed. So that is the reason, guys, the base of everything is data. So data is basically has come from a Latin word which is called datum, and which means something given, which is in a raw format. For example, if you see the number here at the below bottom here, so 140711997 is data. So if I ask you what exactly it is, you won't be able to tell me. You will say that it looks like some customer ID, it looks like some roll number, it looks like some figure, it looks like any particular digit, I'm not sure. But if I process it and if I show you how does it look like after I write it in a format like this, 14/07/1997, you would say in the first shot that, okay, this is the date. This is 14th of July of year 1997. So that is the reason the data is in raw format, and when you process it and when you generate it or when you make it in a readable format, that becomes information. So again, the whole task of data science is to process the raw data and come up with the information and come up with the insights and generate some beautiful insights out of that. That is the whole agenda of this complete data science project. It may be machine learning, it may be deep learning, it may be artificial intelligence, but every technique deals with raw data and comes up with some type of information. Again, let me give you another example. So if you see here, this is some kind of data. I have taken a very small piece of some numbers. So some random numbers has been given here. And if I ask you that, okay, can you see this and what can you tell you about this? So it will be very hard for you to understand, okay, what these numbers are basically. But if I summarize them in a manner where I would say that there are 119 integer numbers and some of the numbers are 779 and the average of the numbers is basically 6.54, And also if I count that how many tens are present in this particular data, so you can see here how many tens are present. So basically frequency of 10 is 14. So what I did, guys, I did nothing, but I took the raw data and I summarized it in such a way that it gives me a lot of information. For example, if this is basically the number of credit cards a person or a customer is having, so basically you can say that on an average, people are having in this particular cohort, they are having almost on an average 6 credit cards. So this is basically a very raw example of difference between data and information. So guys, next thing we'll talk about is basically the theoretical difference between information and data. So information and data basically are complementary to each other, and you can say that data is a picture. Data may be a picture, a statement, a digit, etc. that is unprocessed. So as I said, data is a raw format where it is unprocessed and it cannot be easy to read. That is not in a readable format. However, on the other side, information is something which is organized, processed, and maybe structured in a way that it is more readable, it is more understandable. Also, data does not depend on information. Data is the raw thing, right? But information depends on the data. Why? Because you process your data, you apply some statistical tool, you apply some machine learning tool, you apply some analytical tool, you do some analysis, and then you find what is the information hidden in this data. So data is also measured in bits like KB, MB, GB, TB, because this is a raw format. So you just measure it with its volume. But information is not measured in volume. Information is meaningful insights, some beautiful insights from the data. So it is measured in units, quantity, time, etc. That is the difference between data and information. Now let's come to what is data science. So we understood why analytics is so popular these days. We understood what is data. We understood what is information. And now let's understand what is data science. So guys, as I said, every analysis, every process, or every algorithm, every technique, every analysis, which basically takes raw data as an input and outputs the information, the insight out of that data, the hidden information out of that data is called data science. A data driven process where you process the raw data, you analyze the raw data, and you come up with some information on some beautiful insights. That process is called data science. Now, if I talk about what exactly does it require to learn data science, or basically to apply data science on some raw data and come up with some good insights, or maybe some good prediction, or maybe some good information. So what are the components which are required? So basically there are three components which is required. The first component is programming, the second component is statistics, and the third component is business knowledge or the domain knowledge. So if somebody asks me who is a data scientist, I would say that data scientist is a person who knows programming, who also knows statistics, and who also knows the business or the domain in which he is working. Now, he is not a programmer. He knows programming, but he's not a coder. He knows statistics, but he's not a statistician. He knows business, but he's not a businessman. Now, what is the difference between the statement? What is the exact meaning of the statement which I am telling you? So guys, what I want to tell you is here. So basically there is an overlap of mathematics and statistics is one domain, domain knowledge, or you can say the business knowledge. For example, if I'm working with banking data, so the end-to-end knowledge of how a bank works, what are the sources of revenue, what are the sources of losses, from where the bank earns, and from where the bank loses money. So that knowledge is called the business knowledge or the domain knowledge in which you are working. Suppose you are working with some insurance company, so maybe the complete revenue model of the insurance company, if you know, that is called the business knowledge. From where the company is earning, what are the factors, what are the domains where the company is spending, like fixed cost, variable cost, cost of the agent, payment of the employees, and then commission of the agent. So these are the sources of losses. And also, what are the sources of income? So premium are the sources of income. So understanding the business end to end is called the business knowledge. Now, what is computer science and IT? So computer science and IT is basically nothing but what I want to say is the programming thing, right? So there should be a overlap, or there should be a zest of programming as well. And the third component is mathematics and statistics. So where does a data scientist lie? Can you see this? So data science basically lies an overlap of mathematics, statistics, business knowledge, and programming knowledge. So I can say that a data scientist is a person who knows statistics, but not as much as a statistician, not in depth. He cannot write mathematical equation and tools and all. Also, in the same way, he's not a programmer, he's not a coder. He can write codes, he knows what programming is, he can write simple codes of data manipulation, but he's not a web developer, he's not a programmer, or he's not a software developer. A software developer knows programming more than a data scientist. A statistician knows statistics more than a data science. A businessman knows business more than a data scientist. So what I want to say, guys, a data scientist knows statistics also, business also, and programming also, but not in very depth. So for example, what is the difference between data scientist and a statistician? A statistician is someone who can write 3 pages of mathematical equation. If you ask him what is a normal distribution, he can write all the mathematics behind it. He can derive it on a piece of pen and paper, and he can tell you what is the mathematics behind normal distribution, what is the probability distribution here. But on the other hand, a data scientist will not be able to, or should not be able to, or need not be able to derive those equations. Rather, he knows what are the concepts, what is the normal distribution, where it should be applied, and should my data look like a normal distribution? If it is not looking like a normal distribution, what are the statistical measures should I do? So what I want to say, guys, he knows the concepts, he does not know the mathematics. Same way, he knows the programming, but only for data manipulation. He cannot write softwares, he cannot build softwares. In the same way, he knows the revenue model of a particular business, from where the money comes, from where the money goes, but he's not a businessman. He does not go into the field and does the business. So he is basically an overlap of these three techniques. Now, guys, if I ask you, or you will be thinking that why data science? So as I mentioned, guys, 8 to 10 years back, there was very less data which was being generated. Right now, if I talk about today's era, so everybody, be it an engineer, be it a housewife, be it a child, be it a person who is working in a factory, be it a person who is pulling a rickshaw, or be it a person who is driving an auto, or be it a person who is having a 200 crores of business. Everybody is connected to the internet directly or indirectly through a device, through a laptop, through a washing machine, through a fridge, through a TV, anywhere. And huge amount of data they are generating. Even if you are talking on phone, you are generating data. You're doing WhatsApp, you are generating data. You did a tweet on Twitter, you generated some data. You used Facebook, you generated some data. You went to Google and you wrote some query, you generated data. And huge amount of data is being captured, and Alexa, Siri, Google Assistant, everybody is listening to you, and everybody is capturing your profile, your specific information. So that is the reason when companies know that each person generates the data and that data has been captured. So why not to analyze that data? All these persons, all these people out there in the market are my consumer, right? And if I know my consumer very well, I'll be able to sell him what exactly he wants. It may be a chocolate, it may be a car, it may be a bicycle, it may be an air flight ticket, it may be a Amazon product, it may be a mobile phone, it may be a laptop, be it anything. But until and unless I do not know about my customer, how can I suggest him the exact thing what he wants? Even if I want to sell an insurance policy, I need to understand my customer profile urgently. So suppose if I know my customer very well, that, okay, this is the person who recently got married, or this is the person who recently had a baby. Now the best policy for him will be a child policy plan. Or maybe as soon as he got married, or as soon as he got a baby, I would suggest him that, okay, why don't you take a life insurance policy, where if you lost your life due to any reason, maybe 1 crore rupees will be given to your dependents. So that is the reason, guys. Maybe if I'm a bachelor and some insurance agent comes to me and asks me to take an insurance policy, life insurance policy, I will not take that suggestion very seriously. But guys, as soon as I'm married, and especially when I have a child, I will definitely take that suggestion very seriously. And there are a lot of chances that I will take that policy, and that agent which comes to me will sell that policy to me. So that is the reason, guys. It is very important to understand your customer, what he likes, what situation he is in. Because that was an example of insurance policy. Let me take an example of a banking product. So for example, a person who recently got a new job, he came out of the college, and if you give him a travel credit card, people when they are pass out of colleges, they start earning money, and they have lot of dreams to chase. And as soon as I give him a credit card and I say that, okay, see, on the hotels and on the flight tickets, you would get a lot of discount here. So go and chase your dream, go and travel. You don't have any responsibilities right now. So go and travel and use this card. So it will be like exactly what I wanted, and you are giving me that. So this is the thing, and the same thing, that travel credit card, if you give me after 40 years, when I have like 2 or 3 children and I have a wife, I have a lot of responsibilities, I'm taking care of my mother and I'm taking care of my oldest father. Then if you see that, okay, go and spend on traveling and go and spend on hotels and all. So I will not be taking that product very seriously. But rather, if you come up with some fixed deposit product, and if you say that, okay, now is the time to buy a home, why don't you take a home loan with us? See, I have this much benefits, and I'm going to give you this much benefits. I have a pre-issued home loan with us, and I can give you a gold coin when you take a home loan above 50 lakhs rupees or something. So that is the reason, guys, we need to understand our customers in very much detail. And why data science? Because be it travel industry, be it healthcare industry, be it education industry, be it banking industry, be it insurance industry, be it finance industry, be it construction industry, be it healthcare industry, be it pharma industry, be it medical field, be it engineering field, everywhere you need to understand what the data says. So for example, if I tell you very summarized list of industries which are using data analysis or data science, banking industry cannot survive without data science. I'm telling you guys, no bank can survive without data science. They cannot take even a small single decision without analyzing the customer data. No insurance company on the planet can survive without actuarial science, and actuarial science is being replaced by analytics, data science. You have to have the data analytics process in your company, so that you analyze everything before taking a decision. For example, if I want to roll up a new policy into the market, I will be basically analyzing that, okay, after rolling out this policy or launching this policy in the market, how much benefit I will earn in next 5 years. What are my projections? Will I take a loss or will I get a profit? If I get a profit, how much amount of the profit will be? And will I be able to cover my fixed cost, variable cost, or will I be under those numbers? So all those analysis is being done, and no decision is taken without any data science analysis or data analysis. Financial services like credit card industry, gold loan industry, every industry analyzes the situation, analyzes the data, and then takes a decision. Telecommunication industries like Vodafone, Idea, or any Airtel, or any big shot, or even a small short industrial company, basically analyzes the customer data before rolling out plans, that this is the lifetime plan, this is the 25 rupees plan where you get 20 rupees of talk time. Or maybe they do churn analytics. Churn analytics is basically, if I have 1,000 customers who are associated with me, who are the customers who are very likely to churn my services, who will be leaving my services or going to the Airtel. Suppose I'm Vodafone, and there I have like 2 million customers. So I can find the chances of the highly probable customers who might leave my company and go to Airtel. So now what will happen? I will find out only those 2,000 customers, and I will make them a call. I'll give them a call that, okay, do you want me to basically lower down your plan, or what exactly do you want? Is there any problem you are facing? Is there any something which I can do for you? And this way I can retain my customer. If I talk about healthcare industry uses lot of data science project. Even guys, I have worked on a particular project where I have taken given in this scenario, what do you think? You must be listening to a lot of news where vaccines are being produced, or people are trying to develop vaccines for coronavirus. Now, what do you think? If some vaccine is developed, how do they justify, or how do they basically confirm that, okay, this particular vaccine is working well and good? So before that, a lot of trials happens, and what it happens is some human samples will be taken, and before that some animal samples will be taken, and that vaccine will be given to the animal samples, and the data will be generated. On the basis of that data, it will be taken a decision that okay, we should go for the human trials or not. Should we try this vaccine or humans or not? Then if the data says that okay, go and try on the humans, this looks like safe, then there will be sample of some human beings will be taken, and then that vaccine will be tried on those humans. And then again, if the data which is being captured after the analysis is promising, then only that vaccine will be rolled out into the market. So guys, everywhere data is there. You cannot even imagine that this particular industry is using data science or not. Retail industry like Big Bazaar and all those supermarket, everybody is using analytics, retail analytics, to sell their product more efficiently, to gain more profit. E-commerce company like Amazon, Flipkart, and Big Basket, everybody is using the customer profile data, analyzing it. What offer should I roll out? What product should I suggest? What should be the next product which I should suggest to my customer? Everything is done. That decision is taken on the basis of data analysis. Construction company use deep learning and artificial intelligence model to construct basically the prototype of their buildings, and they can see that how structurally these structures are stable or not. Marketing, where people basically define and roll out different market strategy, and before that you have to develop a lot of different strategy. You have to test it for a sample of people, and then you have to analyze the results that okay, this marketing strategy is working or not. Let me give an example. So suppose Maggie wants to launch a new advertisement on the television. Now what happens is that new advertisement is shown to some 100 or 50 people, and then the response of those people are captured, and after capturing those response, it is decided that okay, this particular advertisement is effective and is able to reach the customer's mind or not. Biotechnology, medical field, for cancer detection, for coronavirus detection. Guys, I have also worked on a project where I took the images of the chest x-ray of corona patients, and I basically developed a model to predict whether the patient is having coronavirus or not on the basis of the x-ray chest images. So that also uses a data science and machine learning, artificial intelligence. Natural language analysis, for example, the chatbots which you are using. So if you go to the IRCTC website, you can see at the right bottom, you can see a chatbot which is called Disha. So you can ask questions like how many trains are there between Delhi to Bombay, and it will reply you with the train number. So what do you think, guys? Is there some girl called Disha who is sitting at some particular place and replying to answer? Absolutely not. It is the robot who is basically chatting with you. It is a computer who is chatting with you. It is a computer who is answering all your questions. So for example, you have Alexa in your homes, and you talk to the Alexa, and whatever you say, Alexa does for you. There is no person in that instrument, and that the commands which you say is received and processed by a computer. The same with Siri. So there are a lot of different applications, guys. So you can't even imagine that this particular company and this particular industry is using data science or not. So travel, healthcare, education are just an example, and lot of different industries. And I can say that today, rare industries there who can survive without data science and machine learning. So if I talk about job openings into data science, so location based, India is having almost 4,000. So these numbers are basically in thousand. So when I say 4090, so that means 4090,000, 4090,000. So basically, the top locations where these job openings into data science are coming is mostly in United States, United Kingdom, Germany, France, and then India. So guys, if I tell you that most of the work which is based on United States on data science is outsourced to mainly India. So you can see, guys, that how much job United States is having and how less service we are able to provide. So that is the gist of this whole scenario, that we are so much behind in terms of supplying good quality data scientists to the world. And that is a big opportunity for India to grow, and big opportunity for India to take the jobs to get the jobs outsourced, or maybe to go and join this type of jobs on that particular locations. And again, let me tell you that in Germany, especially if you go on LinkedIn, if you search about machine learning, data science, and artificial intelligence projects, Germany is quite high in terms of job openings. There are a lot of job openings, and even if you are good at some particular technique like machine learning, deep learning, you might be sitting in Germany and you might be working for a German company with great organization culture and great earnings. So in this particular scenario where everybody is hit with Corona COVID, so that is not true. But as soon as the world comes on track again, there will be huge lot of openings into data science. And guys, this is a serious statement I'm gonna make, that world has known how to work digitally. Now in this situation, everybody is back in their homes and everybody is working on internet. Everybody is working through digital platform like Wi-Fi or laptops, and everybody is working from home. Now this has basically changed the era and the process of how people are working. The world has become digital, and that is the reason, again, when things get normal, there will be a very high hike into the job openings for data science, into the digital, because of the digitalization, because of the automation, because of the data being generated. So this is the whole thing which I wanted to talk about. And also, if I say that 11.5 million jobs will be there by 2026, this is the survey which has been done by one of the most reputed organizations. And the most interesting thing I'm gonna tell you is data scientist job stays open on an average for more than 5 days, but not, which is basically more than any other job. If you talk about a developer job, software developer job, or any other profile job, it does not get open for 5 days or maybe more than 5 days. It is very quickly filled. And the reason is that there are two reasons. And first is there are abundant of software developers. A lot of people are already in that skill. And rather on the other hand, in data science, there are very less skilled people who are available to work and who are available to deliver the quality job. So that is an opportunity for us, for our country, for everybody who is into data science and who wants to learn data science. So basically what I wanted to say, that we are not able to fulfill the demand of the world into data science and analytics. All the big names, if you see, be it Microsoft, Facebook, Google, all the organizations are IBM, Accenture, are working and basically requires data scientists to work with them and to do wonderful job. And if I talk about again the data generation which is being done over the globe, so you can see, as I mentioned, Google basically processes 3.7 billion searches per day. Amazon has almost $2 lakh sales per minute. 4.41 million videos are being watched on YouTube per minute. 15.2 million texts are being sent on social media every minute, and 45,000 trips, round trips or maybe trips, are being used by Uber customers. So this is a huge amount of data we are generating, guys, and that is the reason the data is asset and everybody wants to use this data. Now let's come to our topic, BFSI. Like, what is the scope of data science and what is the scope of data science and business analytics into banking and financial industry services? So first, let's understand basic definition very quickly. What is banking industry? What is financial industry? So banking industry is a subset of financial industry, finance industry. Finance is the bigger name or the bigger domain, and banking is a subdomain of finance industry. So in banking, if I say and if I define it, the difference between banking and finance industry is that financial firms cannot obtain deposit, but rather banking organization can hold deposits from the customer. And how do they work? Basically, from one customer, they will take deposits. They will offer a savings bank account from like 100 of customers, and everybody deposits some amount into that. And using that money, it will give loan to some other customer, and it will earn the amount of loan which it has distributed. So it takes money from some customer and it gives money as loan to some other customer. That is how a bank works. Rather, finance domain is a bigger domain where banking is a part of financial domain. For example, finance domain can be insurance industry, it can be banking industry, it can be gold loan, which is distributing a gold loan, it can be asset management organization, it can be share market investment firm, it can be an investment firm, It can be a mortgage firm, a credit card company, a reinsurance company, a gold loan company, a banking firm, or an insurance firm. So guys, this was the basic introduction of the banking domain and the financial domain. And why do these banks and financial organizations require big data? Because there is a huge amount of data. So you're having salary account, you're having some deposits, you are having savings bank account, you are having some loans, you are having some credit cards. Everybody is having a particular profile or is either with at least one of the banks. So every transaction which you do with a bank, you generate some data, and that data will be held by the bank forever. Even if you leave the bank will store your data. Everything, every small transaction, they basically store it. So the amount of data is getting huge day by day. And that is the reason even banks are moving and financial companies are moving towards big data. Why? Because the amount of data is huge. So they need to implement big data solutions in their organizations. They need to hire data scientists. They need to hire business analytics. And that is the reason, because if they store data, they can increase the customer experience in a good manner. They can increase their employee engagement. They can optimize their operations. The operations will be more smooth and everything will be better. The cost will be reduced. The time will be reduced. And everything can be done if you have the data, if you analyze your data and all. Now, what kind of data a bank basically covers or gathers? So apart from email address of the customer, geography where he lives, industry where he works, which products he is using, if it's related to some organization, number of employees, or if the bank is dealing with some organization, if it is giving loan to some organization, number of employees, financial services which on it is working, who are the stakeholders, who are the related party, what it does it do the anti-money laundering or not, organization is structure, what is the organization structure, everything. So this is customer geographical data which basically bank collects. And also when you are the member or you are having an account with the bank, it basically captures each and every data which you do as a transaction, maybe a credit card transaction or ATM card transaction or online transaction or any purchase do you do. Everything is being captured by the bank and it stores the data for further analysis. Now, if I ask about what is the scope of data science in banking, we have talked about a lot of things about data, about information, about the industry. Now let us see some practical examples where you will see that what kind of projects the bank works and how does they use the customer data to make decisions. So guys, this is just a small list and there are at least hundreds of activities where the bank uses the customer data, and they basically use it for some data science or data driven tools and techniques to develop a data science data driven tool. So this is just a small list where you can see that customer analytics, segmentation analytics, attrition analytics, customer and product profitability analytics, fraud prevention and detection, anti-money laundering analysis, risk analytics, credit risk analytics. So guys, there are a hell lot of things where a bank works. So let's not just talk about the theoretical part. I have prepared some examples for you where you can see with your bare eyes that what kind of projects a bank works on. So let's just take the first example, which is called the segmentation. Now, what is the customer segmentation? First thing, you need to understand that why the bank needs to do the customer segmentation. The second thing, we will understand that how the bank does the customer segmentation and how does it uses your data. So guys, let's just assume that there is a bank who has 2 million customers and who has only 200 personal bankers. Personal bankers are basically the bank employees which bank hires to deal with the customers. Now, what do you do, guys? Can you allocate each customer a personal banker? You cannot do that because you have to give salary to the personal banker and everything is having a cost related to it. So let's just assume that this is the data which the bank has, where the first column is the customer ID. The second column is the spend the customer does on the credit card. Suppose this is a credit card company, and this is the column which says whether the customer pays the credit card money on time or not. So if you see, there are a lot of different customers, and suppose there are 2 million customers in the book of business. In this table, there are 2 million customers. Now, for each customer, I have the amount of spend which they do on the credit card and whether they pay on time or not. Now, what I can do that I can segment my customers, whole book of business. I can segment my customers into 3 segments: premium customers, highly preferred customers, which are highly preferred customers, medium preferred customers, and low preferred customers. Now, after doing this segmentation, I will assign my 200 personal bankers to the premier customers only. I won't assign them to the medium preferred customers or the low preferred customers. I will choose some another method to keep those customers engaged and to take care whether those customers are happy or not. Maybe I will give them a weekly call. Maybe I'll send them an email. Maybe I will call them medium level customers. I'll call them in the branch and I will interact with them like for 1 hour. But for premium customer, they are very good customers. And why they are very good customers? Who will be the premium customers? So suppose with some analysis and some rule, I came to know, and who will be guys better customer? In my opinion, a customer will be better who has good spend, who spends a lot in your credit card, right? Because the bank earns when you spend on your credit card. So who has good spend and who makes timely payment. So suppose after some analysis, I came up with a rule that if the spend of customer is greater than 2 lakhs and he does the timely payment, let him tag as a premium customer. Now, if the spend of customer is greater than 2 lakh, but sometimes he misses the timely payment, let him be the medium preferred customer. And all other customer, all the rest customers in my book who has low spend and non-timely payment, let it be the low preferred customer. Guys, what happened? What I did here is I will allocate 1 personal banker to each customer, or maybe 2 customer, premium customer. I would allocate 1 personal banker, and I will cover all my premium customer. And this way I will make sure that all the premium customers are associated with my bank and they never leave my bank. And even I can sell more products to these premium customer because they are having good spend and they are also loyal customers. They do not miss the payment. So that is the reason, guys, the bank does the customer segmentation to save its cost, to save its time, and to manage the customer in an efficient way. Now, how do you come up with this rule? You come up with this rule with the help of data science, with the help of some algorithm, with the help of statistics, with the help of some programming. So this is how the customer segmentation analysis is done, guys. There is machine learning algorithms behind this particular rule, which I have directly written here. I don't have the time and I don't have that facility to go into the details of that algorithm. If you go and if you learn, and if you get an opportunity to work with that, you will be amazed and you will be very excited to work on those algorithms and come up with these rules and segment your customers in these 3 customer segments, and then go up to your boss, go up to your VP, go up to your CEO and say, okay, these are the segments which I have prepared. Now we can effectively use our customer, where our customers will be very happy, and even I will be able to manage my customer with less cost and less time. Again, guys, the second analysis which you can see, this is called attrition analysis, right? So again, what is this attrition analysis? Attrition means the customer leaving your organization. So suppose I am Bank of America and there are 100 customers. Now 20 customers left and closed the savings account with my bank and they went to Citibank. So that is, the customers are running away from my organization. They are leaving my organization. Now, even if 1 customer leaves my organization, that is a loss to me. I don't want my customer to lose, right? And I don't want my book of business to get shorter. Basically, I don't want to lose any customer in my book of business. Now, that is again very good analysis. And there again, lot of people are involved. There are teams who worked on this customer attrition models. At least 3 or 4 people team work for 6 to 8 months, and they come up with some algorithm which will tell that, okay, these are the customers who are having high probability of, or basically you can say high chances that they will leave your bank, and you need to contact them and you need to take care of them. So guys, let's understand the other problem again. Let's see what is customer attrition analysis, why it is required, how it is done, and how the data is being used. The bank uses your data. So this is the customer attrition. Now understand what is the problem. Suppose there are 2 million customers in your bank and you have a call center, right, where there are only 50 call center employees and 4 zonal managers there, because 2 million customers and calling them each and everybody personally is not feasible, and you will have to pay the call center, which may be again an outsourced organization. So you will have to pay like lakhs and lakhs of rupees to this call center. So this is not possible for you to call each customer and to understand that, okay, are you facing any problem? Are you happy with my bank? Are you thinking of closing the account? What are the pain areas you are feeling? And there is something which I can do. That is not possible. So guys, what we can do is we can take all the customers, 2 million customers in our account, and let's take some features or some information about them. For example, you can see the first column is customer ID, the second column is number of phone calls. The number of phone calls is the number of phone calls which the customer has made to the bank customer care. That means he had some kind of problem and then he had to call. So larger the number of phone calls, that means more the customer is in problem, more the customer is frustrated with your services. Now this is number of bank visits. So that means how many times the customer has to visit your bank. Now it may be the case that he visited with some work, but there are chances in given in this digital scenario, you rarely visit your bank. So if you visit your bank, that sometimes becomes inconvenience for you. Now again, this is the number of disputes raised. For example, suppose I used my ATM and the money was deducted, but the money did not came out of the ATM. Now you have to raise a dispute, you have to run to the bank, you have to call to the customer care, you have to follow it up. And if you had to make like 4 or 5 calls for one dispute, you become very angry with the bank services, you become frustrated with the bank services, and you say, I'm going to leave this bank and I'll close this account and I'll go to some other, because I don't have time to deal with this. Everybody is busy right now. Bank basically counts the number of disputes raised. How many disputes did you raise? Now, number of complaints, how many complaints did you raise? Now, number of times the complaint was not resolved. So this is basically the number of complaints you have made, and this is the basically number of times it was not at all resolved. It remained unresolved. And this is the percentage of your non-resolution complaints. So for example, if you see here for customer, this highlighted customer, the customer ID 13 and the customer ID this, if you see that non-resolution percentage is almost 100%. Now tell me guys that out of this, all the customers who have been mentioned here, who are the most probable customer who can leave your bank? In my opinion, these are the two customers who have high chances of leaving your bank. So rather than calling all the customers, I will ask my call center to call basically only those customers who are having this type of features where the non-resolution percentage is very high, where the complaints are very high, where the number of disputes are very high, and the number of bank visits are very high. So these are the reasons on this basis, the customer, the bank will analyze your data and will flag out those customers who are having high chances of leaving your bank. And that list will be given to the call center. The call center will call these customers and will try to resolve the complaint. Okay, sir, what do you want? What is there we can do? Can we give you a gift hamper? We understand your problem, and your money will be basically refunded within 2 days. And I know that you have faced a lot of problems, so let me give you a gift hamper for that, or let me give you an Amazon coupon for that. So please don't leave our organization, we'll be taking care of this. So this is how guys the bank basically reduced the number of call center employees, the number of calls, the time, the effort, and it specifically targeted the high attrition probability customers, and it was able to successfully retain those customers. So again, guys, this is one of the most interesting projects which every bank does. I have worked on such kind of projects. Now, if I say that this is the particular method where you just see on the non-resolution percentage, or you just see the number of disputes raised and you flag out the customers manually, that is not the case. To do that on 2 million customers and flag out like 300 or 400 customers, we apply data science and statistical techniques, sometimes machine learning techniques. And that is the reason, guys, the data science is required. That is the reason the bank captures your data. That is the reason data is important. And this is how we can save millions and millions of dollars. We can save a lot of customers we can acquire new customers, we can save existing customers. This is how we use the data. Again, guys, there is another example is profitability analysis. So again, we'll not only talk about the theory, but I also created some examples for you so that it become more clear to you. So what is profit analysis? So suppose, again, let's see what is the problem statement. Now, suppose there is a insurance company, or suppose there is a bank who rolls up a home loan product into the market. Now the bank does not know that what should be the rate of interest. Should it be 8%? Should we keep it 9%? Or should we keep it 10% for this home loan policy? Now the bank does not know that what should be the best rate of interest which I should roll out in the market. Now there is the profit analysis project which is required. So for this particular project, what I'll do is I will take these factors under consideration. Now, what is these factors? So suppose I want to try three different rate of interest and see what will be the amount of profit I can make with 8% of rate of interest, with 9% of rate of interest, and 10% of rate of interest. So suppose I do it for 8% of rate of interest. So I will basically try to calculate or analyze that how many new customers I will be able to acquire if I keep rate of interest 8%. How many existing customers will leave my organization if I keep rate of interest equal to 8%? How many existing customers will not be able to repay the loan amount if I keep it 8%? What will be my fixed cost and what will be my variable cost if I keep 8% as my rate of interest? Now, guys, this is nothing but this is 5 years. So this is year 1, this is year 2, this is year 3, this is year 4, this is year 5. Now, suppose after considering all these factors, you came to know that if I keep my rate of interest 8%, in first year I'll be earning $1 million. In second year I'll be earning $2 million, $4 million in third year, $5 million in fourth year, and $8 million in fifth year. Same analysis I do with a rate of interest equal to 9%, and this is basically the amount of profit you make in $1 million with ROI equal to 9%. And same I do with 10%, and where always keep these factors in my mind. After that, basically I have plotted the amount in $1 million on y-axis, and on x-axis you have the years. So guys, you can see here that year on year, from starting year 1 to ending year 5, this is the trend of profit you are making with different rate of interest. Now analyzing these numbers, taking the average, taking the sum, and taking the increasing graph, you can choose at which particular rate of interest is most suitable to my home loan product, and then you can roll out that particular home loan product with given rate of interest. So guys, this is again one of the very best examples of how banking and financial services use the banking data. And again, I have other examples as well, guys. So on fraud analytics and anti-money laundering, on risk analytics also, I have great examples. Fraud analytics is also a part of banking and financial industry. And let me tell you that fraud is a very big thing, which is the banking and financial organizations have to bear millions and billions of dollars of loss because of this fraud. So a money, 1 rupee saved is 1 rupee earned. So if you are able to save like $5 million of fraud on your bank, that means you are able to earn $5 million. And that is the reason fraud analytics is very much important. Now, what is a fraud and how do we identify the fraud? Again, I have taken an example, guys, that how does the bank basically identify the fraud. So basically there is one very important thing which is different into fraud analytics when you compare it with other analytics. And that is what? Fraud has to be captured before it happens. Suppose you have a credit card and you lost it. Now I took your credit card and I went to some gold shop and I want to basically buy a 2 lakh rupees of gold. So as soon as I swipe that card, after few seconds, the decision comes that this transaction is accepted or that transaction is declined. The bank should be able to identify, okay, this is a fraud transaction. And before that accept or decline transaction, the bank should identify that, okay, this is a fraud transaction, we have to decline it, right? This is the most challenging part of a fraud detection. You have to identify it before accepting that transaction. Once you accept that transaction, once the customer has taken 2 kilos of gold and he ran away from the shop, after 1 minute you say, okay, this was a fraud transaction. You can't do anything. You just lost millions of dollars as an amount. So guys, This is the best thing about fraud, that you have to capture and you have to identify in real time. Before you accept the transaction, you have to identify it and then you have to prevent it. So for example, I have taken two different transactions and just try to understand how we can detect fraud, or how a statistical technique, how a machine learning algorithm differentiates a fraud transaction from a non-fraud transaction. So guys, if you can see, the first column is the card number, the second column is the time of transaction. When did that transaction happen? Did it happen 3 a.m. in the morning, or did it happen 7 p.m. in the day? Location, where did the transaction happen? Merchant type, was it a grocery, was it a gold, was it hotel? Then transaction type, what was the type of transaction? Was it a card plus pin? The card was swiped and then pin was entered. Was it a card plus sign, where the pin is not required and you are basically you can use your card and you can sign the invoice? What is the standard deviation of the historical transaction? This is very important, guys. So what I'm calculating here is, for this particular card member, what was the amount? So if you see, the amount of the transaction was, I have not mentioned the amount basically. So I don't need to basically mention the amount. You can see here that he bought a grocery. So ideally the amount will be somewhere around $200 to $500, starting $20 to $500. So the amount is very less. And I compared this transaction with the historical transaction of the same card member, same person. So I found that the standard deviation of this particular transaction is only $34. So what it means is, on an average, this particular person spends like $150 on his card. Now suppose if he spend $184, so what will be the deviation? It will be $34 deviation. So that means this particular variable is very important. This means that the trend is again repeating itself. The person who has done the transaction has done same type of transaction which he always does. But look at, and then what was the customer type? This was a medium preferred customer. Then again, what was the difference in kilometers of the registered address of the customer, which is registered in my database, and the address where the transaction occurred? That was only 24 kilometers. Now let's compare the location. This was into California, which is a central place in America. Now this happened on Mexico border. Now again, this is risky. Why did it suddenly on Mexico border? Now, what was the merchant type? This transaction was done on grocery. Nobody spends a fraudulent transaction. If I get a credit card and I can do a fraudulent transaction, I won't go and buy grocery. I will buy gold. I will buy one Audi car. I'll buy some expensive thing. So this transaction was on grocery. This transaction basically was to buy an Audi car. Again, this becomes more riskier. Now, if you see, this transaction was card with pin and this transaction was card with sign. It is more easy to fraud the signature of a person rather than to remember the pin of the person. And sometimes the merchant does not even matches the signature with your original signature. So card plus signature is more risky than card plus pin. Now, if you see, the standard deviation of this particular transaction from the historical transaction of this particular customer is very less. That means the trend is being repeated. Here, if you see, the standard deviation is like $20,000. That means the trend is very much not repeating itself. This is something absurd. This is something abnormal. Now also, the transaction where it happened is 2,000 kilometers away from the address which is registered with the bank. That again raises a flag. So guys, if I ask you that which particular transaction looks like fraud and which particular transaction does not look like a fraud, you would say that this transaction looks like a fraud, and there are very high chances that this transaction is a fraud, and I will decline this transaction. As soon as this particular customer swipes the card at an Audi sales room at Mexico border at 3 a.m. and he tried to use card plus sign, I would decline this transaction instantly and I would save $20,000. So this is the guys how the data is being used. The analysis I have kept very simple. The data I have kept very simple so that I can explain you with the help of an Excel example. But to do this for millions of transactions, which is happening day night. Lot of machine learning algorithms and data science and statistical algorithms are being used. For example, we basically use sometimes logistic regression for this. The algorithm which is used is logistic regression, and sometimes we also used LSTM technique for this. LSTM is a deep learning technique. So guys, these are the things which I wanted to share with you. Also, anti-money laundering analysis is also done. So for that also, guys, I have taken a lot of practical examples. I don't wanted to talk theory to you. I wanted to show that how the data is being used in your bank, so that I'm able to, or you are able to correlate that how data science is being used. So what is anti-money? What is money laundering? Money laundering is an activity where you use any bank or financial transactions to pass big amount of money to some terrorist organization, to some illegal activity you want to do. So this way you want to pass the money to some illegal activity. Now suppose again I have taken two example transaction. The first transaction is basically of $10 million. This is from some new source which is not known to the bank. The credit history of this person, of this account, is not available, and this account has been opened very recently. The account age is basically only 4 months with your bank. The same way, there is another transaction which is very less into amount, but the source is identified, credit history is also available, and this is 8 years old account. So which account gives you the more chances of money laundering? So I would say that this account is having higher probability that it shows the property, the features of money laundering into the bank. And again, the bank can use this type of data and machine learning algorithms, statistics, and some programming to identify, to flag out the money laundering transactions. They can be fetched out, they can be stopped, and they can be reported to the required police department or any department. So this is how, again, guys, bank or financial organization does anti-money laundering. The next thing is risk analytics or credit risk analysis. So guys, again, I have taken an example. Suppose there are 2 lakh applicants who applied for a personal loan with my bank. Suppose I am Citibank and 2 lakh applicants came to me and they applied for a personal loan. Now, how should I accept, or which particular application I should accept, or which particular application I should reject? I cannot give personal loan to everybody. And personal loan, let me tell you, is a very high risky product, right? Because you do not take any mortgage for that. If the customer comes, you take the salary slips, you take some financial documents, and you give the loan. That is high risk product, unsecured product basically. So what is 30 DPD? 30 DPD is days past due. So 30 DPD means when you have a credit card and you had to repay the amount by 30th June, you had to pay back the amount by 30th June to the bank, but you did not pay the amount and you did it after 30 days, 30 plus days. So that means 30 days past due. This was the due date, but you paid it after 30 days. So that is called 30 days past due. That means you did not pay the amount on time, but rather you paid the amount 30 days later to the due date. So this is not a good thing. That means this is not a good customer. He did not pay the money on time. He paid it 30 days after when it was the due date. Now, what is 60 DPD? 60 DPD, again, the same thing. It is 60 days past the due date. You paid the amount, but after 60 days, 2 months later, when the due date was there. Then 90 DPD is also 90 days past due. So basically what you are trying to capture here is how bad the customer is. If suppose this particular customer who has applied for a personal loan, he owns 5 credit cards with different banks. There was one time when he was not able to pay the money and he paid like 30 days after the due date. 2 times he was able to, he reached 60 DPD. He paid the money after 60 days of the due date. One time he was 90 DPD. That was even worse. Also, this is the column which represents the CIBIL or FICO score. Guys, CIBIL score is basically, if you go to any Indian bank, they will find out your CIBIL score, and CIBIL score represents your financial stability. Higher the CIBIL score, less risky you are. So basically, I could say that higher the CIBIL score, the better the customer you are. So if CIBIL score is low, that means the customer is risky. And CIBIL score basically varies from 100 to 1000. 750 or 800 is considered as a very good civil score. Now, if you see this customer has very less civil score, 350. That means this customer is very high risky customer. His financial status is very financially unstable. Also, if you see, he has 7 liability products. What is the liability product? Liability products are basically loan products, credit card, student loan, education loan, personal loan. He has 7 liability products. So 7 liability products means he has a lot of liability on his head. His credit score is very low. He's not a very responsible customer. He went to 90 DPD once. He went to 60 DPD twice. He was also 30 DPD once. Now, number of credit cards. So he has 5 credit card already. That means he's very credit hungry. I don't know where he is spending, but he requires a lot of money. Maybe he is in some financial problem. That is the reason he is applying for personal loan. That means this is a very high risky customer, guys. As compared to this particular customer who is having only 1 credit card, who only went 30 DPD, maybe it might be the reason that he just forgot the payment to do on time and he reached 30 DPD. You can see he never reached 60 DPD, he never reached 90 DPD, and his civil score is very good, 750, and he's having only 1 liability product. And if you see, this particular customer has very less amount is in fixed deposit, only 20,000 rupees. Rather, this particular customer has 2 lakh amount as his fixed deposit. So guys, if I talk about the risk ranking, this is very high risk customer, this is low credit risk customer, and this is called the credit risk, the risk associated with the credit amount. If you are gonna give some loan to a particular customer, what are the chances that that particular customer will not return your amount? So that is the chances is called the credit risk. So this was fraud risk. The fraud analysis where we did, this was called the fraud risk. Here we call it credit risk, right? You are calculating how risky this customer is. So for example, this customer is low risky, this customer is high risk customer. So we will accept the loan application for this customer. We will reject the application for this customer. So this is how, guys, this all the analysis is done. And again, I would say, and for doing this analysis in Excel, what all things I considered. So if you see, for each different analysis, the columns which I have taken was different. For fraud analysis, the risk factors were different. For credit risk analysis, the risk factors, the columns, the data which I took was different. So you need to identify what type of data has to be taken for what type of analysis. Then again, historical data is used for building patterns. As I said that, for example, if you see and if you remember that in fraud risk analysis, I compared the transaction amount with the historical transaction of the same customer. That what is the standard deviation of this amount with the historical transaction, with his historical amount of transactions. So that is the reason historical data is very much important. And in analysis, we compare and analyze the historical data and keep adding and data, update the model. So on daily basis, people are generating the data. So as much data we take in the analysis, more robust the analysis will be. More the data, more robust the analysis. More the data, more accurate the analysis will be. So keep adding the data and always update your analysis so that accuracy of your analysis and prediction increases. So as I told you guys that what kind of projects we do. So we do projects with risk analytics where a lot of different factors are associated when you are considering the risk, like risk associated with market, risk associated with your competitors, risk associated with the individual whom you are giving the risk, lot of risk associated. So each risk is evaluated before taking a decision, and you also analyze the credit worthiness of the customer. What is credit worthiness? Credit worthiness is basically the analysis of risk of the customer. If he's less risky, that means he's high credit worthy. If he's high risky customer, that means he is less credit worthy customer. Also, guys, as I told you that fraud analytics is somewhat a lot different from other analysis because we always do fraud analysis into real time. For example, there are 1 million applications for loan customers, right? You can do it after 4 days, you can do it after 3 days when the application was done. But in case of fraud analytics, in case of fraud detection, you cannot even do after 1 second of the fraud happening. You have to capture the fraud in real time before the fraud happens. So nowadays, with increasing technology, with increasing algorithms, with increasing computation power, with increasing tools and technique, we are able to capture the real-time analytics as well. And fraud analytics is one of the best example of this technique which we use to do. So apart from these analytics, banks and financial companies also do customer data management, because huge lot of data is coming day to day, and that has to be managed, that has to be stored, that has to be analyzed, that has to be used for analysis, and that has to be done used for prediction. So customer data management is also domain where people need data scientists. Providing personal services, for example, taking the data of a particular customer and suggesting him investment options, suggesting him right choice to invest in share prices. This is also based on data analysis. That is personalized services. Fraud detection, I have already discussed. Algorithm trading is basically helping your customer by analyzing the banking and market data using algorithms which can predict the benefits and losses. So these are the tools and techniques which you can use. And if I talk about the amount of capital and revenue which is involved in this type of industry, so that is huge and a lot. So if I talk about top 12 banks, guys, so if you see the top bank on the planet is JP Morgan and Chase in terms of total assets, and the total asset involved is almost $2,000 billion. So can you imagine that for $2,000 billion to be managed, invested, captured, earned, it requires data analysis, it requires data science, it requires machine learning, it requires prediction, it requires forecasting, it requires data scientists. And same with everyone, guys. Bank of America, like $2,000 billion, Citigroup, almost $2,000 billion group. So banks are the one who are dealing with money. Billions and billions dollars of money are involved, and money saved is money earned, right? So fraud has to be captured. The money cannot be taken as given to the risky customer. This is what happened in the 2008, where Lehman Brothers did not use this kind of algorithms, and they basically distributed the loans, I mean, to the risky customers, and that was the reason of the great economic recession. So guys, this was all from my side. Thanks a lot. I wish you all the best. Be safe, keep learning, and keep exploring. Thanks a lot, guys.